So who are the players in the credit card value chain? As seen here, banks, payment gateways, payment processors, and card networks, among others, establish a web of trust between customers and merchants. For their services, these players charge fees. Let's go through each of them now. First, there is the issuing bank. The issuing bank maintains the customer's credit account and issues the credit card. When a customer purchases something on credit, the issuing bank pays the acquiring bank, or the merchant's bank, which we'll get into in a moment, and takes on a debt. For taking on this risk, the issuing bank takes a cut called interchange, which card networks like Visa and MasterCard set, and the acquiring bank, which we'll again talk about in a moment, pay. The customer is then responsible to repay the issuing bank's debt. The payment gateway, or point-of-sale terminal for physical stores, is software or hardware that securely collects the customer's payment information. PayPal is an example of an online payment gateway, while Square is a provider of point-of-sale terminals for brick-and-mortar retailers. The payment processor works in the background to send secure payment information to the card network. This means processing various payment types and mechanisms and sorting them. Adyen is an example of a company that helps merchants accept a wide array of payment types, and so is Stripe. The card network connects issuing and acquiring banks. So when a customer wants to purchase something on credit, the card network, Visa, MasterCard, asks the issuing bank to grant the credit and then communicates a response to the acquiring bank, or the merchant's bank. Card networks take a small percentage of total transaction volume as payment. They also set interchange rates between acquiring and issuing banks. This fee varies based on the card type, the purchase type, and a number of other factors. Then we have the acquiring bank. This bank works for the merchant, often processing transactions and providing a merchant account. In a given purchase, the acquiring bank takes a cut and pays an interchange fee to the issuing bank. And finally, we have the merchant. The merchant deducts a merchant discount rate from the sale of an item. This is subsequently distributed to the various players involved in the value chain.